Hello, students. This is Miss Mishu, and here's some information on Accounting 1, Problem 3.8 on page 70. So this will give you some practice in analyzing different transactions. First of all, please make sure that you open up this document, which is located on Google Classroom. And let's analyze the first transaction. January 2, Abe Schultz began the business by depositing $10,000 in a checking account at the Shortline National Bank in the name of the business Kits and Pups Grooming. So we now, as a business, have more cash than we had before, so that's an asset. It's increased by $10,000. And then Abe Schultz Capital, which is owner's equity, is also increased by $10,000. So what you need to do is record that here on this sheet. Okay, we will keep a running balance of each account's balance as we move along. Transaction 2, January 3, bought grooming equipment for cash for $1,000. So think about this. We have less cash than we had before. And that's an asset. So cash in bank's an asset is decreased by $1,000, but we have grooming equipment that we did not have before. So that's an asset that is increased by $1,000. So you want to record this on your table. So the balance after the first transaction remains the same. So transaction 2, we have less cash in bank, so you minus $1,000. Grooming equipment, we have $1,000 more than we had before. So cash in bank is now $9,000. Grooming equipment is $1,000. Capital is still $10,000. Okay, so we'll go back to the next transaction after you record that. Number 3, issued a check for $900 for monthly rent. So we have less cash in bank, and capital is also decreased because rent is an expense. So remember, expenses decrease your capital, your owner's equity, and revenue increases it. So you want to go back to your table. Transaction 3, subtract the $900 from the $9,000, the balance before, you have $8,100. We have less owner's equity, so now that becomes $9,100. Grooming equipment remains the same. Transaction 4, bought $6,000 worth of new office equipment on account. Remember what that means, it's a credit transaction for use in the business. Accounts payable, which is a liability, is increased by $6,000 because we owe more than we did before. And we have office equipment now, so that's an asset that's increased by $6,000. So transaction 4, we go back to our sheet. Transaction 4, $6,000 for office equipment and $6,000 for liabilities. And then write down all of the balances here. Now we have $6,000, $6,000 accounts payable, and the other amounts remain the same. Transaction 5, received $700 cash for services performed for customers during the first week of the business. So we have more cash in bank, and if we perform services, that is your capital account because that's revenue. So cash in bank is increased by $700, and Abe Schultz Capital is also increased by $700. So we go back to our table. Increase cash in bank by $700, so $8,100 plus $700 is $8,800. Then we come over here in the owner's equity. We had a balance of $9,100 plus $700 is $9,800. Bring these other balances down. Hopefully you're doing well so far. Number 6, issued a $2,000 check to a creditor as a partial payment for the office equipment we purchased on account. So if we purchase it on account, that'll be accounts payable, and then we have less cash in bank than we had before. So cash in bank is decreased by $2,000, and accounts payable is decreased by $2,000 because we owe less than we did before. So go back to your table, decrease cash in bank by $2,000, so $8,800 minus $2,000, the new balance is $68. Decrease your liabilities by $2,000, that's $4,000. Bring these other numbers down. Okie dokie, here we go. Last transaction, performed grooming services and agreed to be paid for them later. So we have accounts receivable because we don't have the money yet, so that's increased. And the Schultz capital is also increased because these services are revenue. So here we go. So we're going to go back to the table, increase accounts receivable by 500 and capital by 500. And then you want to put all these numbers in. So you should verify that your assets are equal to your liabilities plus your owner's equity. So when we add these numbers up, it should be 14,300. Add those two numbers up, that's 14,300. In the analyze part, it is asking you explain the difference between transaction 5 and transaction 7. So transaction 5 and transaction 7. So with transaction 5, that's a cash transaction because you got money. Transaction 7, it's a credit transaction because the customers haven't paid you yet. So I hope this activity helps you understand how to analyze these transactions better. Submit this document on Google Classroom for credit. Thank you and have a great day.